Hey everyone, this is DayTraderRockStar, and I'm going to do a short video here today with some recaps of some of the past trades we did this week, and also show you some of the good setups that are happening for the end of the week and going into next week. Now, as you know, I trade every day live on DayTradingRadio.com, and I have developed a system of trading over 15 years of my trading career, which enables me to develop discipline and patience in the market. It's based on 5 indicators, and it's not a secret. I'm very open about everything. It's just, I really do believe that being a successful trader takes experience, it takes discipline, it takes patience. And what you need to do to be successful is lower the risk on your entries. Stay in quality stocks, stay away from the penny junk and the crap, and not overtrade. And to do this, you really need to force yourself into a system of trading, really to instill that discipline. So I used my 5 indicator system, which is based solely around, actually based a lot around the stochastic indicator with underlying indicators to back it up. So I want to have excuse me, I have a cold tonight. I want to have that stochastic indicator in an oversold level, which is measuring the momentum of the price. So I want that momentum to slowly cease on the downside. So the momentum, the price movement, or the quickness of the momentum gets into a what we call an oversold level, and then we look for the momentum to switch. So that's my first indicator. And the other things that I'm looking for is a recognizable pattern or a trend line. Sometimes the trend line appears not in a recognizable pattern. It's just an upward trend line in a trend. But lots of times I'm looking for that pullback with the stochastics. The momentum's pulling back. Usually the stock's pulling back. So I look for either a channel or a wedge or some other pattern that I use, the W pattern, inverted head and shoulders. And what I'll do is I'll look to trade those on the pullback of the pattern. So I'm actually taking the best risk-reward trade. I also use the 50, 20, and 200 EMAs. And I also watch some of the reversal candlesticks. And there's hundreds of videos out there I've done on the indicators. So I'm not going to go over the indicators today. I'm just going to go over some of the stocks that we've traded this week and some of the good ones that are set up for next week. So fast 3M was a stock we picked up a couple days ago, sold it today into strength, and basically this was a positive stochastic indicator, a positive stochastic setup where the stochastics were pulling back, but we saw sideways consolidation. A bullish stock, a very good stock. The 3M is a very good quality stock, and seeing that sideways, seeing the move up on Monday, knew that we get that break above the that 2-day high that we're going to get a run. So we actually caught that trade, entered on that break, and then sold into it today for about $1. Pretty easy trade. It was, it was a good stock. It's a good company. It was holding the 20-period moving average. Another thing I think is important for your trading is to establish a set of like a criteria to get into stocks. Now I trade on certain things. I call it like a different types of strategies, or different type of setups, I should say. It's even better, just as setups. One of them is the positive stochastic setup. Another one is a price stochastic divergence. Another one is the just a regular 5 indicator setup, which we want to have at least 3 indicators set up for me to take that trade. One indicator might be just an oversold stochastics, but if I want to also see a lower trend line being tagged, or a 200-period moving average, something else. So the more indicators that have setting up, the lower the risk of the trade, and the better the potential for the pop. So again, all about patience, waiting, letting for the setups come to you. We're going to scream through this fast because my voice is dying fast. Martin Marietta. This is a technique that I call the first pullback out of a trend reversal. So we traded this one back here in this inverted head and slanted inverted head and shoulders pattern, and basically the stochastics made a full rotation. Here we actually pulled back, and we got a nice bounce off of that pullback to the 20. But here we really got a real tight pullback, and this one gapped down. And there's another technique I use. It's called the 5 to 7 day pullback. So the combination of the 5 to 7 day pullback, the oversold stochastics, I was able to get into this and get a bounce off of it. So very nice trade off of MLM also. GLW, that was a quality stock. It was just showing some good consolidation. Not really much other than a trigger out of the consolidation and a further push. We're still holding this one. We had some nice volume on the breakout. Did put this one as the best bet going into today on the break of yesterday's highs, and we see what happened from that. And we broke out. And I'm going to look for that continuation move just based on volume. Stochastic still looks strong. I'll probably look to sell that, sell into strength tomorrow. SYY, Cisco Corp, another good setup. Again, this is not a real standard setup that I usually take, but this is just, again, a 2-day consolidation above the 20-period moving average. Stochastics actually pulled back, so we actually started grinding up, and the stochastics are very bullish at this point. And that's the reason I really got into it. At that point in the trade, right here, stochastics were very bullish. The break out of that trade, just once it broke out, it moved on up, and it continues to move up here. Just want to continue to follow up on some of the older trades so you could see. And again, lots of times you'll see a lot of stocks set up the same way. It might be a lot of channels in the market, a lot of wedges in the market. In this case, we've had a very bullish market, so we're seeing a lot of consolidations and a lot of follow-throughs. So we've been keen on that. But again, the real bread and butter is on the pullbacks and the 5-indicator setups. And we have a couple of those coming into next week, which is really good. A couple more stocks that we took this past week. Again, the BBD. We killed this stock back here into this wedge pattern, 200-period moving average, lower trend line. This area where we took this stock the first time we took this stock was it was a multiple indicator, a high probability setup based on the wedge, 200-period moving average, lower trend line, pattern recognition, everything about this. Got the push up here, sold into strength, got back into it on the pullback, 2-day pullback. There's actually a trend line that comes underneath us, which you can't really see. I should have put that in here. But there is a trend line that comes underneath us here. And actually, we held that trend line. It goes out further. And we bounced off of it. And nice crossover in the stochastic. Continue to hold this. Still looks good. This is called a secondary entry. And almost as good as the primary entries or the multiple indicator setups. It's just basically, there's 2 secondary entries I use. One is just a standard pullback to an indicator. The other one is a full rotation on the stochastics, on the BBD. Waste management is set up here. This is a secondary entry with indicators, meaning that we used some of the 5-indicator setups with the secondary entry. You can see here, the last time we took waste management was out of this multiple indicator setup. And every day I try to bring you this setup, the same setup. This is the bread and butter of the market. So if we can capture this channel, oversold stochastics, 200-period moving average, it's a golden opportunity. Great trade. Now this is really the first time the stochastics made a full rotation. We'll pull back to the 20. We're already getting the bounce. Now, thing is, this technique is called secondary entry with indicators, meaning I'm using the 5-indicator setups, moving averages, oversold stochastics, even a trend line possible. So it looks like a great entry. It did get that bounce off to up to 50, and I think if we were paying attention to this and we saw the setup, I would be able to take that trade right off of that 50-period moving average. Again, another tip is that you need to be prepared going into the markets. You can't just go into the markets and not know what you're going to trade that day. It's very important to have, do your research like we do tonight. Plan out your setups, know what prices you want to look for, know your entries, know your exits, and basically stick to that game plan. FDO, next one. FDO, we got into this one today just based on the 5 to 7 day pullback. There's a gap up here. This one's a little tougher because really just taking it off the 200-period moving average, 5 to 7 day pullback, gap down, and just starting a position off the 200. There's a chance that this one actually could pull under the 200 a little and then bounce back up. But the risk reward looks okay here on FDO, so this looks interesting going into next week. One of my favorites, though, and again, I'll save that favorite for last. You probably guys know what it is. GNK, we got into the position today on this one. This one's basically what I call a trend line break, first bounce, and first retracement. All right, so that's the first bounce off to the retracement, the first retracement off the bounce, and you want to take that long as it's off the recent lows. You scale into it off the recent lows. That way, it gives you a good risk-reward trade. If it breaks down below the lows, you have a very fast out. And what you're going to look for is this W pattern to play out. The stock to move up off of this. So you have this downward move, that first breakout, that first retracement, and then the continuation. That pretty much puts in the bottom and really sets this one up good. So not my favorite setup, but I just took this one strictly on the pattern. And again, another setup that I usually take, this bounce retracement pattern, the W pattern. Now AKS Steel also setting up. This one was brought to my attention in the room. This is actually looking back at here. You can see the coiled stochastics. I did a great video on that a couple weeks ago, about last week, and you can see the coiled. Just looking back at the history of this stock, you can see there was a great pattern here. There was a channel with the coiled stochastics and a breakout up to that point. From that point on, we kind of drifted all the way back down, and then finally broke out here. And this is really the first the first rotation in the stochastics and the first pullback. So this is called a secondary entry with indicators. All right, the secondary, the stochastics oversold, 50-period moving average, 200-period moving average, all around here. So AKS Steel looks very good in this $15 range. Now, another thing is, what I've noticed a lot is traders come to me saying, well, I tend to get chopped up a lot. You have to really believe in your setups. You're not going to be able to cherry pick the market here. You're not going to be able to say, oh, I'm going to get in at 15 or exactly. You blink your eye, you go to the bathroom, and do something. It comes down, touches that moving average. But you got to believe that your entry in this, and it could be even lower than this. The market tends to, test the limits. So, I would put my entry level anywhere a little under the 50-period moving average, all the way up to the 200, and understand that that's your entry level, and your exit level is going to be up, wherever your target's going to be, and we calculate that out in a different way altogether. But this one looks really good on the AKS. First rotation on the stochastics looks good. Brought up into the room, and again, just to talk about a room, we do have a members trading room where all the traders, we all work together basically to bring these setups to the forefront of the room, and we discuss them. We set them up, we trade them, and we take profits on them, and we just continue to rotate that money from one stock to the next stock that's setting up. So it's important when I put out my 10 for 1,000 watch list each week. It's basically those are the setups I'm looking for. These higher quality, high probability setups where you're able to get into these setups, take a couple points off of them, rotate that money into the next setups that are set up. These are all quality setups, low risk entries, and pretty much, and I'm going to say it right now, the best and only way you're going to make money in this market. I mean, yeah, there's other ways to make money. You could scalp the market. You could catch momentum trades and stuff. But if you want to be doing this long term, you have to lower your risk on your trades. You have to have discipline. You have to have patience. Anything else, you're going to fail at this. And that's the truth. That's the truth. This is probably the hardest thing you'll ever do. The psychology behind trading is it's off the charts. I mean, what happens with the markets and how you're going to deal with getting into bad trades and dealing with the loss and of money and stuff. You have to learn how to the trade with discipline, know how to take trades off the table, know how to let things run, know how to have the discipline to get in and out. And this takes time. It actually takes time and experience. It's not something that someone's going to come into and just learn how to do that overnight. And and I've learned it myself. I've learned it over years. I've learned how to lose money. Now I know how to make money, and that's my job now, is just to pass it on. And kind of put it out there, saying, hey, you might go out there and there might be tons and tons of people out there offering things all over the market. There's only really true one way of making money, and it's been proven. All right, is get the best price for your product and sell it at a higher price. And the best price is usually a good stock and a trend. You get the trend on the pullback. You buy that product or that stock. It continues to move higher. You sell into strength, and you continue to do that. Don't reinvent the wheel, people. Don't chase things. Don't fall for tips. Don't believe that bells and whistles are going to make you money. It takes good old-fashioned homework, technical analysis, discipline, patience, everything else that goes along with that. Then you'll be successful, right? Simple as that. I get fired up about this stuff because, we do it every day in the markets, and it's great. It feels great. You feel comfortable. You feel great about it. Anyway, enough of that. Let's go into the best bet going into next week is McDonald's. MCD, this is a high probability setup going into next week. This means the multiple indicator setup. Indicators, stochastics, trend lines, recognizable patterns, moving averages, support and resistance. It has it all. All right, it has it all, people. McDonald's is ready to rock. So it's kind of a freebie. Normally we talk about this in the room, but because it's such a good setup, I want to throw it out there for everyone. But got a lot of good setups setting up for next week too. So we're gonna get the next watch list out on Sunday, and the McDonald's setup here. Let's just go over it fast. Again, you can see the pullback, 2 month, almost going on to 2 month pullback. The stochastics are oversold, almost a double bounce here. You have a little bounce and then pull back to the stochastics. So this is actually very bullish in itself. We're on the lower part of the trend line, the 200-period moving average right underneath us. The only reason I put this dotted line in here, we don't know if this is going to be the trend or we're going to slap down and this is going to be the beginning of the channel here. Lots of times I see the gap where we have the gap, the top of the gap range there, where it was usually where I put my trend line in. So it does almost seem like that 200-period moving average right underneath us is going to be the ultimate level. But like I said, you could probably scale in anywhere from this level down to 72.50 and be good to go because you're going to get a nice move up to 75. So we're going to look for a little further downside tomorrow, maybe down to 73.25, 73, 73.30, 73.25. I would say actually the 200-period moving average, maybe a little bit below that, 73. Oh, actually 73. $73 would be perfect, or a little bit underneath that. And that's going to be great. You can even wait for the stochastics to start turning back up. But this is going to be a great setup. I welcome everyone to come by the room, or by the site, actually, DayTraderRadio.com, and check out the trading. It's live video screen, live trading from 8:30 in the morning to 4 o'clock. Every setup that comes around and I can see, I'm going to bring up on the screen, and we're going to take care of it. And there goes my voice. So I did get my video out tonight. I hope you appreciate it. I'm out of here now. See you in the markets tomorrow.